do you even begin with investing? How do you actually grow your wealth without drowning in complex strategies? And most importantly, can you really make money without taking on massive risks? These are the exact questions that every beginner investor asks. And if you're watching this, chances are you've asked yourself the same thing. Well, I've got good news for you. The answer is much simpler than you think. In this video, I'm going to walk you through a step-by-step guide to dividend investing, one of the most powerful ways to build wealth over time. I'll break it down in a way that's super easy to understand with real, actionable steps that can set you on the path to financial freedom. And here's the best part. By the end of this video, I'm going to show you how a simple $7 a day investment can grow into a $900,000 portfolio that pays over $60,000 a year in dividends. That's $5,000 a month in passive income. If that sounds good to you, smash that like button and let's dive right in. All right, first things first, what exactly are dividends? When you buy a stock, you're essentially becoming a part owner of that company. And just like any good business that shares profits with its owners, many companies reward their investors with dividends, a portion of their profits paid out to shareholders. Think of it like this. Imagine owning a small coffee shop. Every month, after paying all the bills and employees, you're left with profits. Now, instead of keeping it all to yourself, you decide to give some of that profit back to the people who helped fund your shop. That's exactly how dividends work. These payments usually come in cash and are paid regularly, either quarterly, semi-annually, or annually. Now here's where things get interesting. You don't just collect these dividends and spend them. Instead, you can reinvest them to buy more shares of the stock, which then earns you even more dividends. And this is where the magic of compounding kicks in. Over time, those reinvested dividends start snowballing, helping your wealth grow exponentially. We'll talk more about this in a bit, but for now, just remember, dividends are your ticket to creating passive income and long-term financial security. So why should you even care about dividends? Simple. They can dramatically boost your investment returns. Let's take the S&P 500 as an example. Over the last decade, the average annual return from stock price growth alone was 10.92%. But here's the crazy part. If you had reinvested those dividends, that return jumps to 12.99%. That's the power of dividends. They don't just add to your wealth, they multiply it when reinvested. Now, some people argue that dividends aren't a big deal. There's even a theory called the dividend irrelevance theory that says it doesn't matter if your returns come from dividends or stock price growth. But here's the thing. Dividends give you real tangible income. When the stock market crashes, dividend-paying stocks can act as a financial anchor, giving you steady cash flow even when stock prices drop. Think about it. If you have a portfolio that pays $5,000 a month in dividends, it doesn't matter if the stock market crashes tomorrow. You're still getting paid. That's why dividends are a game changer. And I might just change your mind by the end of this video. Now that you know what dividends are, the next step is setting clear investment goals. Ask yourself, why are you investing? Do you want to generate steady passive income? Are you looking for long-term wealth growth? Or maybe both? A great way to set your investment goals is by using the SMART method. S stands for specific. Set a clear target, like earn $1,000 in annual dividends in 5 years. M stands for measurable. Track your progress, like increase investment by $100 every month. A stands for achievable. Set realistic goals. R stands for relevant. Make sure your goals align with your financial plans. ET stands for time-bound. Set deadlines, like build a $1 million portfolio in 30 years. Your risk tolerance is also key. Are you conservative, like prefer stable, low-risk stocks? Or aggressive, like willing to take on more risk for higher rewards? Whatever your style, diversification is key. Spreading your investments across different industries like healthcare, tech, and consumer goods can help protect your portfolio from market downturns. Here's where things get really exciting. What if I told you that you could build a $900,000 portfolio with just $7 a day? That's right. By consistently investing just $7 a day, that's less than a cup of Starbucks coffee, and reinvesting dividends, you could potentially build a portfolio that pays over $60,000 a year in passive income. Here's how it works. Year 1, $2,555 saved. Year 10, $45,500 with an annual dividend income of $1,539. Year 20, $252,000. Year 30, $897,500 with an annual dividend income of $6,495 or $541 per month. And the best part? This is just from a small daily investment. So, which dividend stocks should you invest in? Here's a portfolio of 5 hand-picked stocks that provide high-quality dividends, long-term growth, and stability. Number 1. SCHD, Schwab U.S. Dividend Equity ETF. The core of your portfolio, offering steady income and price appreciation. Number 2. Kroger, KR, a strong consumer staples company with consistent growth. Number 3. Vanguard S&P 500 ETF, VOO, provides diversification and exposure to the broader market. Number 4. Extra Space Storage, EXR, a high-yield REIT with strong long-term performance. Number 5. AbbVie, ABBV, a pharmaceutical giant with a history of growing dividends. Together, this portfolio gives you growth, stability, and passive income, with a dividend yield of 3.03% and an 11.73% dividend growth rate. If you're serious about building long-term wealth through dividend investing, start today. Consistency is key. Don't forget to like, subscribe, and hit the notification bell so you never miss a new video. Thanks for watching, and I'll see you in the next one.